Okay, we move on. Just a snapshot on some PIT facts. We know we are taxed on a territorial basis as opposed to a worldwide basis. Okay? What this means is, in Malaysia, we are taxed only on Malaysian-sourced income. If you have, say, a property in London and you receive rental income from that property, that is not going to be a Malaysian income because it's not sourced in Malaysia. That property sits outside Malaysia, and Malaysian tax authorities are not interested to tax this income. Okay? So we need to look at the source of this income. So if you're looking at, say, dividends, it needs to be Malaysian shares. If you're looking at employment, then it's an employment that's being carried out in Malaysia. Okay? So the exercise of a Malaysian employment. So for some of you, you might say, oh, but I work in Malaysia, but I have a contract with head office outside Malaysia, and I'm even payrolled from outside Malaysia. Is this Malaysian-sourced income or not? Okay? Employment income, remember, the source is the place work is carried out. Okay? So source is very important. As a resident or a non-resident, tax resident or non-tax resident in Malaysia, we are only taxed on Malaysian-sourced income. So between a resident and non-resident, what is taken to tax? No difference. Year of assessment, we already know that. We are now reporting income for YA13. Okay? YA13, whilst we are earning that income, various sources of withholding at source has already taken place. For employment income, for example, it's monthly tax. Okay? Business source, for example, the monthly CP500 installment plan or any other types of, say, rental income. Okay? So that says that actually is called a current year system, meaning you pay when you're earning the income, a current year system. But we still are on an assessment base, meaning at the end of the year, we still need to put in an assessment. An assessment. We need to file and be self-assessed. Taxable income, we are going to cover some of these classes of income, just to give you some clarity on which pockets your income goes into. And this impacts some of you on the reporting, as well as which form you actually download to file. Okay? So we're going to break it into employment and non-employment source. Residency. How is residency important? For a Malaysian like you and I, if we are resident in Malaysia, we get to enjoy the graduated rates of taxes, 0 to 26%. We get to claim all those lists of reliefs, that 17 reliefs that we have, Malaysia has. Okay? I said earlier, resident, non-resident, no difference between the income that you bring to tax in Malaysia. All income sourced in Malaysia needs to be reported. It's just how that tax on that income is calculated. Okay? Graduated rates, reliefs against the chargeability. Okay? I mentioned this earlier. Our highest rate of taxes is 26%. I will show you the table later on. Let me just start with employment income. I think a number of you here actually earn employment income. So let me just start with employment income, and then I will pass it on to my colleague, Ping Ping, to take over on business income and the other categories. We know employment income being one class of income itself is actually broken into different types of elements. Okay? So we have the cash type, the benefit type. Okay? We have the entry payments like a handshake. Okay? Like a sign-on bonus, for example. And then we have all the exit payments like compensation, severance, the golden handshake types. Okay? Some of these payments are quite complex in the sense that you need to analyze the nature of such payments to determine how such payments are taxed. Okay? Now, the first responsibility to do that, is it you or is it your employer? The answer is it depends, okay? Your employer needs to have sufficient knowledge, just as you as a taxpayer need to have sufficient knowledge to know what to report in your tax return forms. Your employer likewise has that first responsibility. Why? Because they prepare that Form EA for you, okay? So they have the first responsibility of ensuring that certain types of exemptions, for example, okay, are already taken into account when they put the final figure into your EA for you to report in your Form B. How many of you actually go through your Form EA and check that your employer has done a good job? Very good, I'm impressed. Okay, so it's important to at least know the legislation, to know how certain income types, employment income types are subject to tax. And I can assure you that some of these payments, the analysis of the taxability of that income can be quite complex. Let me give you an example. Let's just look at sign-on bonus, okay? This is common maybe at high executive level, okay? Certain key positions, we find this person, say, who used to be some ex-CEO of, you know, some important organization, but we definitely want him for our organization right now because this person needs to grow my organization in this area, okay? So we want to encourage or induce that person to join us, for example. Okay, it need not always be just key positions. Sometimes it can also be you want a person to join you so quickly, but the person still has a notice period to serve, right? So as an employer, you say, why don't you join me now? I'll pay off that notice pay for you. Okay, these are all comes within the pockets of sign-on. Okay. So is sign-on something that goes into your EA? What do you think? Is it income or is it a capital payment? Do you have any chance of being able to argue out the challenge of it being income altogether? Okay? So that's where all the analysis comes in. Okay? How do we analyze that payment? What is considered employment income? Employment income, basically, if you look at the words of the legislation, it says that anything paid to you as an employee in respect of having or exercising an employment. So it means a performance of service, right? Indicates a performance of service. So let's come to a sign-on bonus. Let's go back to this CEO, this highly in-demand CEO that you want, okay? You are going to pay him 50,000 for him to join your organization, okay? Now, if you tell this individual, I'm paying you 50,000, please join me, and first day he comes to work. 1 month later, he leaves the organization. Now, that's where the analysis comes in. Is this amount recoverable from the individual just because he joined you for 1 month? Okay? Now, usually that's decided up front, right? The fact that this amount is recoverable, albeit in proportions maybe, the fact that he only serviced you for 1 month will mean that it is for or exercising an employment because he needs to carry out a service to keep the entire 50,000, right? So does this sound like or implies towards employment income and therefore needs to be reported in the EA? Yes, it does. It cannot be capital in nature, right? The other type of analysis, so a lot of companies actually can plan around things like that. You can ensure that you pay a person an inducement pay outside the employment contract, say, okay? Or you can ensure that you pay the person before the person starts an employment for you. Okay, so whilst there are ways to plan around this, we have a very favorable capital gains tax in Malaysia. Okay, so many types of capital gains are not subject to tax in Malaysia other than real property. So there are means where you can plan around that, but you have to realize that a lot of corporations are unwilling to, part with a capital sum just to induce people to join you. So coming back to my, what I'm trying to say here is an analysis is important because even within employment income itself, there are many, many types and complexities surrounding how, in substance, those payments are made. The other one is stock options. I'm not going to go through them. We know stock options has very complex laws, okay? Especially when people start to work cross borders, yeah? People have a partial job here or being seconded overseas to take care of a China plant, things like that. So how's stock options being subject to tax?